Hello, Warden residents. This is your treasurer, Lorie Barnwell, and welcome to the next episode of Money Talks. So we are going to be talking about home ownership today and the entire process. But I have a very special guest here with me today, Kyle Johnson.
Hello, thank you for having me.
Thank you so much for being here, Kyle. Really appreciate it. Looking forward to this conversation and your experience and expertise in all things home ownership and mortgages. So tell us a little about yourself.
Yeah, like you said, my name is Kyle Johnson. I am a Warren resident and have been here since my wife and I, well, she's a lifetime resident, but I moved to Michigan in 2014 and found, of all places, Warren to be the home I never knew I was missing. And so now we're firmly entrenched in the community. I'm a school board member of Warren Consolidated Schools, and we could not think of a better place to try to not just grow our roots, but try to help the community in a lot of different ways. And talking about home ownership is one of those things that I love to do. So I'm really happy to be here.
Excellent. Like I said, we're really excited. And one thing knowing you and Taylor personally, you both really take advantage of the idea of home ownership. You guys have really built a really nice community right there in your neighborhood, right there, off like 13 Mile in Warren. And so when we talk about home ownership, I think building that community is really one of the fundamental reasons for home ownership. Wouldn't you agree?
It really is. We get in fights routinely with our neighbor anytime they think of even entertaining the thought of potentially leaving, because we really truly have found a wonderful community. And home ownership brings so many things to people, but for us, the primary benefit that we've had is really finding our people and being able to raise our kids side by side and tearing down the fence between us during COVID so we could all share backyards, and having the opportunity to do that in a city like Warren has been fantastic for us. So
that's awesome.
Yeah.
So if someone is listening to this and they want to be a homeowner, they want to buy a home, what are the first few steps that they need to take?
For me, first of all, it's a very wonderful dream to be pursuing. And the first thing I like to say to everybody is that it's closer than they think it is. There's a lot of misinformation about what you need to do and who you need to be and what those qualifications are. And so for me, the first step is always to educate yourself. We do this with a lot of the purchases, the large purchases we make in our lives already, but for some reason, we think that going to the internet and just trusting what we read specifically on this topic is something that we can do more. And so I always recommend to start by reading as much as you can, but then also find a trusted professional that you can really listen to and learn what those requirements are before you really start delving into anything else. It's just education and making sure that you know not only what the process is, but how that fits with your needs and what your goals are, so that you're not pursuing something that is not actually aligned with what your dreams and your benefit and your family goals are.
Absolutely, because I think we almost think as humans final product.
Yes.
So okay, I want to go out and find that dream house.
Yep.
But before we do that, we have to pump the brakes and find out what we need to do. As you said, get educated. What are we actually going to be qualified for based on our credit and income?
100%.
So could you talk about that a little bit?
Yeah, and it's one of those things that I'm really staunch about as a mortgage professional is that I can never tell anyone what they can afford. All I can do is tell them what they qualify for. And so if you qualify for a payment that you feel like is out of your means, then you need to really be strict in what you're doing for yourself and not just trust what somebody says that you can afford and really understand your own personal economy. And so that first step is really to reach out to a mortgage professional and start that discussion. Like you said, it's more than just income. It's a holistic view of your credit profile, and making sure that whole equation works out in your favor. I call it the 4 C's of credit, right? We've got credit, and then there's collateral, which is what the house will be. You've got your capacity, which is just your income compared to your debts going out. and then your cash reserves to be able to afford the initial investment, or what we usually think of as just like the down payment and closing costs.
Right.
So tightening up those 4 C's will allow you to be in a position where you're able to accomplish those goals a lot faster than I think people realize.
Excellent. So that I really like that 4C idea. It's very comprehensive for residents to kind of try to wrap their head around. With the credit piece of it, I know there's residents, I think we all can relate in some ways. Hey, my credit isn't the greatest. I made some mistakes when I was younger, and so I never really cleaned any of that up. So what would you say to a resident who maybe like doesn't know what their credit score is, or doesn't really know where to begin to like start to raise that up?
Wonderful question, and it's even deeper than that, I think, because credit scores, what they do is show how well you manage debt. So there are lots of people who have avoided debt their whole lives who are kind of punished by not having the credit score that they want. And so it's wrapping your head around that idea that you need to show the bureaus that you can manage carrying that debt, right? And so specifically with the scores, there's a lot of information out there that's not necessarily true. And so understanding exactly what your targets are is a great place to start. There's a lot of people who feel like maybe they can't get approved when their credit is perfectly fine from a lending perspective. And so leaning into that education aspect, just understanding exactly where it really needs to be versus what you think it needs to be because you read it somewhere. And so wrapping your head around building like a target that you want to get to, and then doing the steps that you need to in order to get there are going to set you up for the most success. And I can talk about like the factors that go into building a credit score so that we can understand the actions we should take if that's where we kind of want to go next.
Absolutely.
Perfect. So the number one factor when it comes to your credit score is going to be what is known as like your payment history. And so we're looking at whether or not you miss payments. If you do miss payments, how long are you waiting to pay them? Is it a 30-day late? Is it a 60-day late? And then the distance between where we are now and the last missed payment. That takes about 35% of your credit score, so it's a big chunk. The next one is going to be the amount of credit, and it's more than just like a dollar amount. It's really a percentage of the available credit you have to what your utilized credit is. So it's a percentage that we want to try to keep lower. And that's another 30% of your score.
So if someone has, like as an example, like a $500 limit at Kohl's.
This is literally the example I was going to use. Go ahead, sorry. Yeah.
They should really go over 200, correct?
Yeah.
Or some number like that.
And we can look at specifically like somebody who maybe only has $500 on their credit report, but if that's all of the available credit they have, compared to someone who maybe has $5,000, but they have access to $15,000. Just because this one is maxed out is what's going to make it a little bit worse. And so it's really a balancing act of making sure that you're showing that you can manage the debt, but also keeping those percentages pretty low. Stepping down from that, we jump into the categories that are less of an effect. 15% of your credit score is going to be based on the age of your credit. So how old your oldest account is, how young your most recent account is, and then the average age of those credit accounts. And then the last two factors at like 10% each are like credit mix. So do you have a bunch of unsecured debt that is like credit cards, that is monthly installments or monthly payments, or is it like secured installment debt, like your car loans and your house, which is typically a little bit safer. And then the recent credit history. So opening a bunch of accounts back to back to back at one time, or like credit inquiries. I know people sometimes are afraid of having their credit pulled. Mm-hmm. It has a very minor effect, but it's one of those last two pillars of building that credit profile.
Excellent. So really sitting down with a mortgage professional. Mm-hmm. To really even just ascertain what is going on with your credit report, right, and where are you at and where do you need to go, right, is really like step one.
It is, because no two lenders are the same. The overarching guidelines for all programs are a little bit looser, I think, than people realize, but each individual lender may have stricter guidelines in place. And so that's where it's really important to start talking to a mortgage professional first, to really have that picture of how much you can afford and what your individual journey is going to look like. And
Right.
to talk to multiple lenders to try to make sure that you're partnered with the one that has your best interests in mind.
Now, as someone is listening and thinking about, okay, what can I do? Maybe I don't have good credit, or maybe I really don't have much of any credit.
Yeah.
Would like a secured credit card,
Yeah.
or what are some other things that they can start to do now,
Yeah.
even in preparation for that conversation with the professional?
100%. And just a quick caveat, I'm not a credit repair specialist. It's not what I do. So I do know a lot about it. But typically a really good first step would be to obtain one of those secured credit cards. They tend to give you potentially better interest rates, and it is something that somebody who doesn't have a great credit profile will have more ready access to than an unsecured credit card. And so it is a great first step. And then starting to just use it. Buy your groceries with it and then pay it off. Buy your gas with it and then pay it off. And show that you can manage that access to credit is going to start to have faster impact than I think a lot of people realize. It can take a couple months before you all of a sudden are in a completely different world than you ever thought was possible. So
For sure. No, well said. And I think for just those residents listening who maybe don't know what a secured credit card is, could you explain that a little bit?
yeah, so secured credit card, there's the difference between secured and unsecured debt is just the presence of collateral. So once, if something has no collateral backing it, then it is considered riskier. So lenders, which all creditors are lenders, are going to attach higher interest rates and more stringent guidelines. But if it is secured by something that they know that they have access to, in the event that you default on that credit, it opens up that ability to have more risk because they know that there is some path to them protecting themselves.
Excellent. So great first steps for the credit piece of
Yeah.
it. So when one of the other C's you were talking about, the down payment.
Yeah, cash.
So yeah, cash. So when someone wants to buy a home, they have to like have the income, have credit, or be on that journey to get to where they need to go for credit, but they also need some kind of down payment. So could you talk about that a little bit?
Absolutely. And this is another one where there's a lot of misinformation out there. I think a lot of people are used to understanding the metric of 20% down. And it's a wonderful goal to aspire to, but it's not by any means a requirement or how typically most people become homeowners anymore. Minimum down payments typically are around 3 to 5%. Depending on what type of program you're looking at. So being able to understand that and have an actual target of what you're trying to save is really important. But one thing to keep in mind is that the down payment is not the only investment that you need to bring to the table. There are closing costs that are associated as well. And so I generally, as a rule of thumb, tell people to expect between 2 and 5%, so 3.5% right in the middle. So if you're looking at like a 3.5% down, 3.5% for the closing, if you can target having about 7% liquid readily available for you, that's a good target to have in mind to really start feeling like you're able to aggressively get out there and shop.
Excellent. So on like on like a $200,000 home or like a $100,000 home, what would be the amount of a goal that you would tell residents to kind of save for?
So if you're in that $100,000 price range, 7% of that would be around $7,000. And so you should feel pretty comfortable and confident that if you can handle that as a down payment and you're all in cash to close, you should be within range. And then just at 200,000, it would be double that. So around 14,000 is where you would be for that ballpark.
Excellent. So, and I know the first episode, we talked a lot about savings.
Yeah.
And about how that's a practice on, separate from this conversation, but really looking at our spending. How can we cut spending? How can we be intentional about putting money aside every couple weeks, every month? and really seeing almost savings as like a bill that we need to pay.
Yeah.
And so I think that residents might be listening to that and think, oh my gosh, that's so much money.
Yeah.
But I think it is, but also on the other side of the coin, we need to look at our spending.
Yeah.
And find out how can we cut back. How can we cut back on some of the many streaming services that we pay for? How can we cut back on DoorDash? I always say DoorDash because that's one of my kryptonite things. That
weekly, if not monthly, conversation between my wife and I. So yeah.
Exactly. So there's things that, how maybe we can cook at home more, or maybe we can, do such and such, have like host like a game night at our house instead of going out to the bar.
Exactly.
Or finding ways, they may seem little, but everything adds up.
Yeah.
It adds up very quickly.
And I like to say something along the lines of the same as like saving for your 401k or retirement, is I always say pay yourself first.
Right.
And so if you can be really diligent and good about paying yourself first, and knowing that, hey, the first portion of my paycheck is going to go into this account and it's going to stay there because I have a goal that I am searching for, and I'm going to make sure that I'm able to do that. So you're paying your future self in order to set that aside. And then it's never in your monthly economy. It's already where it's supposed to be, and you just focus on what you have in front of you. And that can really help with a lot of the desires to maybe spend it before you have the ability to.
Right.
If you just immediately cordon it off, and so you know that that's being used for something else already.
Absolutely. And it's not easy. It takes
It's not.
discipline.
Lots.
And sacrifice. So, and I mean, it's really choosing the life that you want on a more long-term basis.
Yeah, it is.
And, like myself, I always use DoorDash and food because that's what I like to go do. But so not going to like Andiamo's or Paul's Chop House, here and there, but really scaling it back. Like
Going to Fred's, as I like to call Meyer.
Right.
Frederick's.
Yeah, exactly. So finding those things that it's like you can't, if you want to save for this, you're going to have to cut back.
Yeah.
You're going to have to scale things back. And it's not, maybe friends of yours like are, over here, they're already homeowners and they're able to do these things. You got to kind of, really kind of take a back seat and pause for a minute.
It's the same as any other lofty goal that anyone has in life. No one is going to be able to accomplish any of their long-term goals without that type of discipline. And with this one, it's just a very, very specific monetary discipline.
Yeah.
And if it's something that's important to you, then you can pursue it. And it doesn't happen overnight. And there's going to be months where you do a really fantastic job, and there's going to be months where maybe you slide a little bit. But it's like you said, it's more about the journey than the. As long as you keep your focus on the end game, the journey that you take is your own personal journey, and everybody does their own path. So.
Right, absolutely. Okay, so hypothetically speaking, let's say that we went on this credit journey. We're at a score where it's, it's good.
Yeah.
It's good enough to buy a home. We have the $7,000-8,000 saved. We have the income. So what's the next step? What happens next?
Yeah, and that's really where it's time to, if you haven't at least already started a relationship with a lender, reaching out and starting to find someone, because much like the usage of your credit is not about a dollar amount. When you're looking at getting pre-approved for a mortgage, it's not about the dollar amount of your income. It's another ratio. So what a lender is going to look at is how much money you have coming in every month compared to how much money you have going out every month. And then they have certain ratios that they're not allowed to exceed. And that's why I always say I can't tell you what you can afford. I can tell you the max that you qualify for, because not everybody should probably be over leveraging them to the max that they're capable of. And so that's where you really step into that process of reaching out to a lender, starting that conversation, getting pre-qualified, and they're going to have the same conversation you and I are having. They're going to talk about income, assets, and credit, and get some verification documentation to prove all of that. And then if everything looks good, then you'll have yourselves a pre-approval letter, so you can really start buckling down. And for me, psychologically, the important aspect of that is how well it helps by setting your budget first.
Yes.
Because I don't know about you, one of my favorite websites is Zillow. I just like looking at the houses.
Right.
And then I
Yes.
fall in love with one, and then I'm like, oh my goodness, I could look at that backyard. The kids would have so much fun. And then I might get overly attached to it, and then I realize I actually can't afford it. It's out of my pay range. And then maybe I get discouraged, and now I'm no longer shopping for a few months. And I've kind of reset my timer, and I put myself back at ground zero. Whereas if you do your due diligence up front, you figure out exactly what your budget is, what you can afford, and what you're qualified for. Then you know what parameters of what type of house you are looking at. And maybe you don't get fully married to the dream house right out of the gate. You get married to the one that actually accomplishes all of your family's needs and still is, you know, a wonderful, magical thing to change your life. But it's within those means, and you're not over leveraging yourself.
Absolutely. And you said it perfectly about why you should get a pre-approval first.
Yeah.
Before, like, I go on Zillow too. I'm not even looking to move or anything.
Not at all.
It's just like
Just
we're
love
just
it.
burning time. But, but I think people who want to look for a home, that's the fun part, right?
Yeah.
Is going on Zillow, going to open houses, and everyone should have that. Everyone should have that. That is like the fun part. You've done the work, have the fun. However, like you said, if you have the pre-approval first, you'll be able to dream shop realistically.
Exactly.
And in your budget, in your credit, with like the down payment in mind, and then it's like, okay, here's your parameters. Now go have fun.
And it's just like our conversation about the discipline it takes to save the money. I always say, like, I'm one of the weird people who actually likes talking about finance. Most of us don't like having these conversations. So if you do that disciplined hard work up front, then the rest of it is just fun.
Exactly.
Rather than having the ups and downs of the journey, do the hard work up front, figure out exactly what you're looking at, and then it's just a pleasurable experience from that point forward. And you can avoid a lot of the heartache that comes from doing it in a different path. So
Excellent. Yes, good, well said. So now, okay, so you have this pre-approval, and now you're ready. So what's the next step from there?
From there, it's to find a real estate agent. The danger of maybe going to, well, first of all, every real estate agent is going to tell you the first step after you contact them is to get pre-approved. So they're going to get you connected to a lender anyways. You kind of insulate yourself from any potential heartbreak by doing it first and then finding a real estate agent.
Yes.
And you can work with whatever real estate agent you want. There is a unique, distinct benefit from working with a real estate agent that already has experience with your lender. They know each other's processes. They know the inside, inner workings of both sides of the coin. But finding that real estate agent who's then going to do a mountain of work for you that is usually greatly underappreciated because we think that there's just a house, they found it. But there is so much back-end work that we don't really see them doing. But that's the next step, is to get connected to a real estate agent that you can trust, that your lender can have a good relationship with, so that the three of you now are a unified team with that same goal of getting keys in your hands. So you've got your beautiful new Warren house, and just marching forward together to start the next phase of really actively shopping for a house.
Excellent. And then going back to the pre-approval conversation, if you do the pre-approval first, which you should,
Yeah.
That way your new real estate agent, they know what your pre-approval is, so they're not showing you
Exactly.
houses that are outside of what you, because I mean that would be unfair, right?
Yeah.
So they know what you're pre-approved for, so they're going to show you some really beautiful homes that are more in what you can actually get and what you're looking for.
And they won't get your hopes up on the one that you can't afford. Right. So,
Exactly. Okay, so you find a real estate agent, you have your pre-approval, you see maybe, 5-10 houses, but then you walk into that one.
there you go. Everything, it always just feels like grandpa's sweater or something. I don't know what it is. There's something, you walk into the house and you're like, no, this is my house.
Yeah.
Yeah.
I remember when we saw multiple houses when we first moved back to Warren, and when we walked in, I was like, this is my house, So it was just Awesome. So, and that moment that you feel like, okay, this does it. This checks all my boxes. I like how it's laid out. This is going to be, and when you walk in when you walk in a home, you see the memories that you're going to make. So,
Yes.
and it's great. So you find that home. Okay, so then what's next?
That is where your real estate agent earns their keep. It's a mad dash, especially in the market that we're in right now, of them trying to put together a really fantastic offer that puts your best foot forward and negotiating with the listing agent. So there's 2 real estate agents that are going to be involved in every transaction. The agent that lists the property, and then the agent that is making the offer on your behalf. And then they will fight for you and make sure that your offer is the one that's accepted. And sometimes it's not. And then you find the next one that sings to you. But that's the next step, is where the real estate agent really jumps into pretty rapid, swift work to try to make sure we get you to the closing table.
And sometimes you'll have to pay over what the asking price is to have a shot, but would still not be over what is on your pre-approval.
Right.
Yes. Okay, so let's say that this hypothetical situation, we got it.
Yep.
The offer was accepted. So, and of course, there's a lot of background paperwork and things happening. Just explain to us just like a couple things that are happening.
The next 30 days are going to be a lot like like a duck is what I say. You see very calm on the surface, and then underneath the water, those legs are just going crazy. There is tons of people that are now jumping into the process to make sure that you get to the closing table. The biggest one for people to wrap their brain around is title work. Title is the legal ownership of a property. So there are companies that are called title insurance companies, and their job is to go out and basically do research on the title and make sure that the seller has the legal right to sell it, make sure that nobody else has any claims on it, to issue what's called a clean title so that you can buy the house and have no worries of any kind of complications down the road. There are various other services that need to be done. An appraisal needs to be done on the property to make sure that it's worth the purchase price. Inspections need to be done to make sure that there are no, just to delineate the difference between those. An appraisal is strictly to determine the value of the home, whereas an inspection is to determine if there's any kind of issues with the home. So some people confuse the two, but they do accomplish 2 different goals that are necessary for you. So there's a bunch of different people on the team that then jump to work to get this to the closing table so that you can get those keys in your hands, hopefully in the next 30 days. And it's all part of all those services, we'll circle back, are a part of those like closing costs we talked about earlier. A lot of times people think that closing costs are just what goes to the lender, when that's really only one of those. There's 3 pillars of closing costs. There are the lender fees, but then there are third-party fees, paying for the appraisal, paying for the title work, paying for the inspections. And then there's this last category that I call like prepaids, which are other fees, setting up your escrow account so that you can pay your taxes and insurance when they're due, which is your money. It's just put into like it's quarantined in a separate account so that you can pay it when that's due. And those are those 3 kind of pillars. And once they do all of that work, you get what's called a clear to close, which is where the lender says, hey, we've done all of the work, we can close anytime. And then it's between the real estate agents if we want to potentially close early or stick to the initial closing date on the purchase contract. And that's kind of the tail end of the process.
Excellent. And just so residents understand, and you kind of touched on that, all of that background things that need to be done is really for the person buying the home.
Yeah.
So like the whole title work thing, that way you know that it's like it is a clean title.
Yeah.
There's no one, and really like that way someone's
third
cousin, oh no, I had rights to that house, and that way you can rest easy knowing that that's something like that's not going to happen.
Right.
The assessment property
bringing
is
you into the fold here.
Is basically showing that the house does have the value that it's advertised as, and that's really important too. And the third one being that it's, it's really important to do that inspection. So that
Yes.
way there's no, and that's not to say there's not going to be nothing wrong with the home,
Yeah.
but that way you know.
Yeah.
And I think that for, being a new homeowner, you're excited. You don't want any surprises.
Right, and it
So-
also just protects you because buying a house is the single greatest investment the vast majority of us will ever make in our lives. And if there is significant structural damage or anything that would put your investment at risk, it's important for you to know that up front, because every purchase contract is going to have some type of inspection clause in it. You have the right to inspect it, and if it's that bad, you have the right to walk away as well or renegotiate with the seller. And so those inspections are vital for you to protect yourself as a consumer and as a resident looking to purchase a home.
Excellent. And so, assuming all of those boxes are checked, everything looks good, we're at the closing table. What should someone expect that day?
That day is going to, hopefully you remember every second of it because it is a special day. It is going to be different for everyone. We bought our house from my wife's grandmother, so we all just got to sit around the coffee table together signing the documents. But what happens on that day is you'll have someone that's called a settlement agent who will come with a stack of documents this big. Your wrist is probably going to hurt by the end of the day, but you've got a lot of documents to sign, a note, which is the promissory note, your promise to repay the mortgage. You'll sign the deed and take ownership of the property. And depending on the agreement between you and the seller, you can take occupancy sometimes that day. Sometimes there's a 30-day occupancy where they have the right to vacate the property. But it's really just kind of hopefully a big celebration for you. And maybe you do go to Andiamo's that night instead of eating at home because you've accomplished your goal. But yeah, that day is going to be a little bit chaotic sometimes. Depending on how smooth the process was, sometimes there's still some paperwork that needs to be done. It's a lot of money, so sometimes the funds need to be shifted around so that they're ready to be wired immediately. So just stay calm and enjoy it as much as you can, and enjoy the. I remember the last time we refinanced our house, my son was sitting at the table with us, and he thought that he needed to sign every one of the documents as well. So he had his own pen with the cap on, and he's scribbling on it like I would sign, my wife signed, and then he pretended to sign. So you can really make it a fun experience if you enjoy it. So yeah.
That's awesome. Well, I mean, it's his house too, right?
It is his house too.
He'll tell you.
He will.
So everything closes, you have the keys. What are some, and we can kind of talk about this, what are some, just real quickly, some differences that you're going to have as a homeowner as opposed to like a renter, or as opposed to like maybe you were like living with a friend or living with family?
There's a lot of them, and there's one that I'm really excited to talk about with you because you know more about one of the topics than I probably do. But one of the things when we're considering that affordability that we talked about at the beginning is that it's not just the payment on your mortgage that you're now responsible for. You have to pay for your homeowner's insurance. You have to pay your taxes. You have to pay for utilities. You have to pay for maintenance. I think about 14 days after we closed on our house, our water heater flooded the basement. That's now our responsibility. So there are additional costs that you need to be prepared and ready for. And hopefully your real estate agent and your mortgage, your lender discussed with you the fact that the taxes could change. I know that oftentimes that doesn't happen, but every time there is a transfer of ownership, there's a new assessment that is done on the property. And so those taxes could go up. And you may have thought that a specific monthly payment was coming your way, and then all of a sudden your taxes change on you. And so you just need to be ready that there are some things that are outside of anyone's control that are now your responsibility when they come.
Absolutely.
And so just being ready for those things is really important.
Yes, well said. And I think when we talk about the taxes and the state law, especially in Michigan, residents might look, online at like a current home and say, "Oh wow, their taxes seem low."
And it was bought in 1990.
Right, and because of that, because of the residents who are in the house currently, they're kind of capped a little bit,
Yeah.
and they can only go up so high. So what happens is when a new owner purchases it, the taxes become uncapped
Yep.
and then reset at the usually
current assessed
higher,
value.
exactly. And so, residents, when they look at the current taxes, oh, wow, look at that. But it's only being assessed for like a $100,000 home when the home they are going to buy it for about $200,000.
It happened to Taylor and I. We bought, like I said, the house from my wife's grandmother, and someone failed to file the paperwork for the non-arm's length transaction. And so it was an uncapped reassessment, but we were able to bring it back down to where it's supposed to be since it was a family transaction. But it's shocking for people when it happens. And so hopefully that's part of your education. Hopefully you're being cared for by your professionals, and they prep you for that eventuality.
Yes, and I would say if they're not, I would say do call your local treasurer yourself.
Always, yes.
And I think that's really important. And, I've had residents call and say, hey, I'm looking at this house. This is how much is listed for. Could you just give me an approximate, just based, just on like the listing price? It might be, a little fluctuated in there, but what, and then I tell them, and again, it's all about expectation.
Mm-hmm.
And so we're not saying these things to scare anybody from being homeowners, because I think that the path that you laid out today, it's very doable.
It is.
For so many residents. But it's all about those expectations and understanding, so you know what to expect.
Right.
So if you are looking at a home and you know your income and you know what the listing price is, call your local treasurer or assessor to find out, hey, if I buy this home for this amount of money, what are my taxes going to be? So
Right.
that way you can plan on a monthly basis how much extra that that could possibly be.
Precisely.
And then some of these other things, like making sure you have a fund for things that might
Pay
go
yourself
wrong.
first.
Yes, pay yourself first, and and that's why that inspection is important. But then other things come up
Right.
unexpected, and lawn care. We really try to focus here on Warren about being part of being good neighbors is upkeeping our property,
Mm-hmm.
and that doesn't mean and I'm saying this. My home is never going to win like a beautification award because I'm not a gardener. I think there's so many residents their homes are just beautiful.
Yeah.
But it's like you'll walk up and my home looks clean. There's it's like presentable basically. And I think that's great.
Yeah.
So don't feel like you have to spend all this money on landscaping, but just make it nice and clean and presentable.
Right.
So make sure your grass is cut, stays cut. So and that keeps out a lot of like animals that might get in.
It also is protecting your investment, because if you don't do that routine maintenance and you don't take care of it, it could lose value. It's all part of like making sure that you are taking care of the home that is there to protect you and your family. So you have to protect it as well. And so it's vital for that upkeep and keeping it safe from the elements. So
Absolutely. Anything else that you'd like to share with residents about any of the process of?
one thing we didn't really touch on, and I think it's important to at least know that they exist, is the presence of things like down payment assistance programs and other type of community lending things that are available to you. I don't want to go too deep into it, but we have an amazing program in Michigan called MISHDA. I know you and I have spoken about it in the past, but these programs are in place to help increase home ownership. And so not only does MISHDA cover your down payment in a lot of cases, but there is usually an excess of funds available to help you with those closing costs. So even if that $7,000 or that $14,000 seems unattainable, know that there are options available to help make that even more manageable for you, and that there are a lot of different solutions out there. But the only way to discover them is to educate yourself and to find a trusted professional that you can have these conversations with.
Absolutely. And also reaching out to your city,
Yeah.
or the county, and really, because they are community development
Yeah.
Sector of the city of Warren. they're really kind of on the pulse of any
Yeah.
new program that happens. So I would encourage all residents to reach out to the city, to their city, township, or county for more information as well.
Absolutely.
So I just want to end this segment with each of us talking about what being a homeowner has meant to us.
Okay.
So I know this is kind of off the cuff, but I was hoping you could talk.
Oh goodness,
a
I'll
little
try
bit
not to
about-
cry with this. There's this commercial for like, I don't remember if it was like one of those VR headsets years ago, and it's a couple that is getting ready to sell their house, and they're walking through the house and they see all these moments through their kids' lives through like the VR headset, and just all those memories that snap back. To me, a home is not a physical thing in this world. It's where my kids get to have breakfast. It's where this morning my daughter has finally discovered how to kind of climb out of her crib. And so my son and I were sitting there eating breakfast, and I hear her door open very gently and quietly in the hallway, and like I know that, oh, I get to see my daughter now. And so it's those little things that being a homeowner opens up for you, and just knowing that like that's my daughter's door, and she has control over that door, and that's her room, and she helps clean it, and like having that kind of ownership of our little slice of not just, you know, Warren, but of the world is something that's really special that I think everybody should have the opportunity to attain in their lives. So for me, homeownership is truly my kids and my family is what it is. So
That's beautiful.
well, thank you.
Yeah. I would say I've had the pleasure of owning 2 homes in Warren. The first one I owned from 2010 to 2020, and then we moved just like a mile away. And my mother-in-law and father-in-law bought our previous house.
Oh, that's cool.
So it's kind of nice now. Both homes are in the family, and
Yeah.
it's like I see when I drop, you know, when we go over to my mother-in-law's house, which we do often, you know, to see my 2-year-old run the halls that my
Yeah.
12-year-old ran, and just this, you know, you kind of see yourself in different moments in time.
Yeah.
And I saw myself on the couch with my older son, who's 12, and thinking, praying, oh man, I just wish that he could have a brother.
Yeah.
And now seeing in that same living room them both playing together and running around, and you know, building those memories, having different, you know, parties and friends over, and just, hey, do you remember that one time when this,
Yeah.
this, and this? And I agree. It's like it's building the things that matter to you most in life,
Right.
whatever that might be. And I agree. For me, it's my family.
Yeah.
You know, my husband and my children, and my dogs too. So watching them just be, you know, think, you know, if you have a dog, it's like they think, you know, this is my castle. This is my castle to protect.
Yeah.
And sometimes, you know, dogs, as oftentimes they do, say things, they don't talk, but they demonstrate things in a way beyond what we do often.
Yeah.
And just how dogs feel about homes, that this is mine
Right.
to protect and mine to love, and this is my place.
Yeah.
And I just think that's what it is.
It's
is that-
equally beautiful.
yeah, thank you.
You're welcome.
Well, thank you so much, Warren residents, for joining us today. This has been, I hope it's been a very helpful conversation. I know there are things that I'm like, wow, I kind of forgot about that. So if you have any other questions on anything finance, feel free to reach out and let me know, and we'll have even more guests on. So have a wonderful day. Thank you.